Welcome back. As you all know, the stock market has taken massive hits due to coronavirus fears. But what exactly is going on and what is next? Joining us now with a market update, certified financial planner and president of Shakiba Capital, Trevor Shakiba. Welcome to the show. The last time you were here, Trevor, we were chatting about how a correction might be coming. And since then, we have watched the Dow fall and fall and fall.
Yeah, crazy times, unprecedented volatility, and man, has it ever happened quickly.
So for people out there, Trevor, you've been on the show for years and you've talked about panicking and how emotionally reacting to the market is never a good idea. You may have some people out there who think that now is the time to sell, but you are saying absolutely not. Why would you sell when things are so low?
Yeah, absolutely. Look, especially now, the market, depends on the day, is moving so quickly up and down. There is just zero possibility that you're going to get it right and be able to time the market. We talked about this just a second ago, but we went into a correction literally in 6 days, which is a 10% pullback or more. And then we went into a bear market, which is a 20% pullback or more in 22 days. So if you think now where the market's at, getting out is going to work out for you, I've got advice for you, and I just want the viewers to know it is not going to work out, especially now. The best thing you can do is stay diversified and basically hang on, because I do think it's going to continue to be volatile until some of the uncertainty gets alleviated, and hopefully that's soon.
And when you say stay diversified, could you be a little more specific? Like what exactly, how should we be allocating different funds if we have money in the market?
Yeah, so diversification basically means that you don't want to own just one thing. And so if you look at your 401k or your investment statement and you only own 3 mutual funds or stocks, you are not diversified. And so what I mean there is make sure you have the right allocation as far as equities, bonds, and cash. And that was what we were talking about earlier this year, is as the market really did well last year, make sure that you rebalance, because when things turn, it can happen quick. And you want your portfolio, you do not want all of your portfolio to either go up or down. You want some things that are actually doing okay right now. And if you don't have positions that are stable, then you're going to see way more volatility, which we've definitely seen here over the last 3-4 weeks.
And Trevor, I know you have 3 critical pieces of advice for us. We're going to get to those in 1 second. But quickly, are we already in a recession? The chairman of the Fed has not said we are officially in a recession now, but that looks quite likely, does it? Does it not?
Yeah, I mean, I'm getting that question a lot. And we are, by all measurements, going into a recession. We're probably already in one right now, and I don't want to just overwhelm everyone with bad news. But look, I've seen estimates in the second quarter where GDP potentially could be negative 10 to 20%. We just saw unemployment jobless claims yesterday, which were over 3 million. That is the worst ever. But I do want to just say, look, we are hopeful that this is going to be short term. Hopefully, if we can get the economy going again, that we will have good, positive growth in the third and fourth quarter and see more of a V-shaped recovery. So again, hang on. And that's going to be one of my points, is hang on. We will get through this.
And aside from the market, we will get through this indeed, right? But aside from the market, let's talk about people. Let's get into these 3 tips. If you are still getting a paycheck right now, you say now is the time to really be sure you are living below your means.
Yes, look, we just have so much uncertainty right now. So if you are still getting your paycheck or half pay, or maybe you know that you're going to get a couple more paychecks, make sure that you are living deeply below your means. Now's not the time, Derek, to be on Amazon and shopping and buying all these things. There's just too much uncertainty. Increase liquidity, increase your cash reserves, and make sure that you're going to be able to bridge this gap as best you can.
Let's say someone already has a little bit of money in their cash reserves. Is now a good time to think about paying off the car, or even, I don't know, putting extra payment toward the principal on your mortgage, or even paying down some credit card debt?
Yeah, again, I've gotten this question a lot, and I think a lot of people are scared, so they want to pay off their debts so that payment isn't there. This can be the one time ever that I'm going to advise this, but now is not the time to do that. Liquidity and cash flow is king. So I'm not saying don't pay those debts. I'm saying pay the minimum. Don't put extra to the credit card, certainly not the car or the house. You need all of your cash flow to simply go right into your reserves so you have that liquidity, because the future is just unknown.
And you say right now is a great time to just reach out to your friends and neighbors, elderly folks who may be, I don't know, home alone.
Yeah, and so this, kind of goes beyond financial advice, but I just want to put this out there because the Houston Life has a great, great community. Now's the time to be reaching out to everyone, your neighbors, see how everyone's doing financially. If you are in trouble, ask. And like I said before, we are going to get through this. This isn't going to go on forever, and hopefully we can peek our heads up in the third and fourth quarter and see that we're on the road to recovery. So that's just a little bit of encouragement to me as best I can.
And we're just about out of time, Trevor, but very quickly, one of our viewers, Katie on Facebook, is asking, is her 401k safe? You addressed the 401k, but dig into this answer for us.
Yeah, I don't know the specifics on that question, but look, the 401k, it depends on what it's invested in. The 401k is an investment itself. Think of it as a holding vehicle. So if it is invested in equities or primarily in equities, you have probably seen a significant decrease over the last month. But remember what you're doing here, because I think a lot of people get caught up in the emotion and think it will go to zero. You are still invested in the greatest companies, hopefully domestically and internationally. So stay the course there. Yes, you want to be diversified and potentially rebalance. And if you're still getting a paycheck, this is a great time to still be dollar cost averaging or saving in because the market's low. So I wouldn't say it's safe, like it's not going to go down, but that doesn't mean that it's going down to zero, which is a common misconception where people think, yes, it's just dropping. Before you know it, I'm not going to have anything. That's not a logical conclusion. Stay diversified, stay the course. When we look back on this 6 months, hopefully a year, and then of course longer than that, this is going to be a blip on the radar. I know that's difficult to comprehend right now, but definitely stay the course there.
All right, Trevor, always great advice. Good to see you from your very nicely decorated home office. And we'll see you back next week on the show. Sounds good?
Yeah, you bet. All the best.
All right, you too, bud. Hang in there. And in the meantime, as always, if you would like to connect with Trevor, you can visit shakibacapital.com.